All right, so Uber's latest earnings report just hit, and honestly, the headlines are kind of confusing. We're seeing some really good news, but also some pretty worrying news. So what's the real story here? Let's dig in and find out. Okay, so this is the central mystery, right? Their revenue is up, which is great, but their profit is down. How on earth does that work? And for investors, what does this signal? Is this a good sign, a bad sign? That's what we need to figure out. So let's start with the financial scorecard. To really get a grip on this, we're going to look at just 3 numbers. That's it. 3 numbers that tell most of the story. All right, number 1, and this is the good stuff, quarterly revenue. They beat expectations. They brought in more money than Wall Street thought they would. And what that tells you is that demand is strong. People are taking Ubers. They're ordering Uber Eats. That whole delivery thing wasn't just a pandemic fad. It's here to stay. Okay, next up is a metric that I personally pay a lot of attention to, gross bookings. And guess what? They beat the forecast on this one too. For a company like Uber, this number is huge. It's a fantastic sign for the health of their core business. So you might be asking, what exactly are gross bookings? Well, think of it like this. It's the total amount of money that flows through the Uber app before they pay the drivers or restaurants or anyone else. It's the raw numbers showing how much people are spending. A big number here means the platform is buzzing with activity, and that's exactly what you want to see. But here's the twist, the red flag. Net income, the bottom line, the actual profit, it dropped. So wait a minute, revenue is up, bookings are up, but profit is down. That can only mean one thing. They're spending a lot of money. And the billion-dollar question is, what are they spending it on? And that massive spending brings us to the next chapter of this story, the billion-dollar robo-taxi bet. Yeah, this isn't about, new office furniture. We're talking about Uber pouring an insane amount of cash into one single giant bet on the future, self-driving cars. And don't just take my word for it. The CEO, Dara Khosrowshahi, calls it a massive future opportunity. He's not thinking of this as just some cool side project. Nope. This is their moonshot. This is the home run swing that could completely redefine what Uber is. And look, this isn't just talk. They have a real concrete goal here. Robo-taxi services up and running in 15 cities by 2026. That is incredibly ambitious, and it puts them in a very, very expensive race against absolute giants like Waymo and Tesla. So that brings us right back to the main issue, doesn't it? This is a bet the company kind of expense. It's the reason their profits look weak right now. So the question is, how can they afford to shovel so much money into a future that, let's be honest, is still a huge question mark? Well, how do they pay for it? That leads us to what I'm calling the new profit engine. See, to pay for this super expensive future, they have to get way more profitable right now. So they're basically building a whole new money-making machine inside their existing business. And this new engine really has 3 main parts. First up, advertising. You've probably seen them, popping ads into the app. That's almost pure profit. It's a gold mine. Second, subscriptions. Think Uber One. This creates loyal customers and, more importantly, a steady, predictable flow of cash every month. And third, AI. They're getting smarter about using AI to help you find new things and, well, spend a little more money. It's all about making the ecosystem they already have much, much more profitable. Okay, so we've looked at the numbers and we've looked at this massive, expensive bet on the future. The big question is, what do you do with all this information if you're an investor? Let's boil this down to a verdict. Buy, hold, or wait. This really lays out the 2 completely different ways to look at Uber right now. The bulls, we optimists, they say, look, you're investing in a global leader. Demand is solid. They're finding new ways to make money. And hey, if this self-driving thing pays off, it's a home run. But then you have the bears, the skeptics, who say, hold on, profits are unpredictable. That robo-taxi bet is just burning cash, and you're buying a story for the future, not a profitable company today. All right, to make this super practical, let's put it this way. If I had $1,000 to invest right now, what would I do? And of course, quick reminder, this is just my 2 cents. It is absolutely not financial advice. Okay, here's my move. First off, no way am I going all in on Uber today. The whole robo-taxi dream is just too far away. If I already owned the stock, I'd probably just hold it, but I definitely wouldn't be buying more at this price. The real move for me is to sit on the sidelines for a bit. I want to wait and see if these new profit engines, the ads, the subscriptions, actually start delivering serious cash. I'll be watching their earnings reports like a hawk for the next 6 months to see if that profit story gets stronger. So, to sum it all up, my final verdict, in one word, is wait. The story is fascinating, no doubt, but the risk, it's just too high for me right now. I think patience is the name of the game here, at least until we get a clearer picture of their actual profitability. And I'll just leave you with this one last question to chew on, because it really gets to the heart of it. What is Uber? Is it a transportation company that happens to have a good app? Or is it a full-blown tech giant that's building the future of how everything moves? Because how you answer that, well, that changes everything about how you value this company. Drop your take in the comments. Would you buy Uber today? Yes or no? And if you want simple breakdowns like this on trending stocks, earnings, and money moves, subscribe to this channel, Findolax. New videos every week. Turn on notifications so you don't miss the next one.